To help calm the worries that a stronger yen could mess with the global stock market once again. So as you can see, there are lots of reasons behind the recent stock market decline. Now that you have all the facts, let me give you my thoughts on all of this and how you can adjust your investing strategy. As always, I'm not a financial advisor and none of this should be taken as financial advice. I'm just speaking from years of experience actually investing and seeing situations like this happen time and time again. Firstly, throughout my investing journey, one phrase has always served me well: buy when there's blood in the water. In other words, when the stock market is in decline and people are panic selling, pushing prices down to irrational levels, that's the time to step in and invest. Another phrase that teaches the same thing is buy the dip. I know it should go without saying, but if you want to do this, then you need to make sure you have an emergency fund of at least 3 to 5 months of your living expenses. This is more crucial than ever as the stock market is in a turbulent time, and you don't want to be forced to sell your stocks at a loss, only to find out later that if you'd held them, then you'd actually have come out ahead. Look, nobody can predict if the stock market is going to go up or continue downwards. However, I've always come out on top eventually by dollar cost averaging into a low cost S&P 500 index fund as it declines. This essentially just means buying at regular intervals as the price drops. This could be every day or every week. For all the people that have been watching my videos, waiting for the perfect chance to jump in and start investing, if I was in your shoes, I'd start my journey now. Yes, you can't guarantee returns, but at least you're entering at a lower price point. If you're looking for a good investing platform to use, then one of my favourites is Trading 212. Since I was planning to talk about their app anyway, I reached out to see if they'd be interested in sponsoring this portion of the video. They agreed and are also offering a free fractional share worth up to £100 to anyone that uses the code Tilbury when they create an account. Plus you can get more free fractional shares by inviting your friends. Both of you will get a free fractional share as long as they fund their account. Secondly, make sure you're diversified. This basically means spreading your money across different baskets of assets like stocks, bonds and even crypto. This is key to reducing investment risk and smoothing the ride through a crazy market. So if one stock or industry is a bad day, your other investments may help offset those losses. If you're an index fund investor like me, then you'll be pretty diversified anyway. But bear in mind that the S&P 500 is top heavy with tech companies, so it might be worth investing in a total US stock market fund to get even more diversification. Thirdly, keep your eye on the long game. It's easy to be positive when your portfolio is growing, but when things start to go a bit south and your gains start disappearing, it can be really tempting to sell everything. I've been there, but holding on has always worked out for me. Trying to guess the best times